Okay, hi everyone. Welcome back to part 3 of our news trading session. Obviously, we're going to end with inflation or CPI. Let's do a quick audio check and see if everything is all right. And hi everyone, good evening. Hope I'm well. I actually do have a little bit of a sinus problem, but hopefully it doesn't get away in the way of our presentation tonight. All right, just audio seems to be good on my side. We can get started. My name is Peter Jodo. Let's kick it off with inflation. And we already have the PPI number yesterday, and we're going to review that. We'll also take a look at the core consumer price index, or the CPI, which is the inflation, and we'll take a look at the historical results of that as well. All right, just before we begin, just a quick disclaimer. Any opinions discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution. So be attentive when you're determining the volume of your transactions and consider all possible risk factors, which is what we're going to be doing here tonight anyway. All right. As per usual, there's going to be bonuses for participants. You're going to get your promo code to double your deposit bonus soon. So you can use the promo code for 100% bonus to double your deposit and maximize your profit potential. You also should have access to private Telegram channel if you register through email, and you should be receiving it via your email. All right. A little bit about myself. My name is Virenjaro, and if you guys are new here, I've been a full-time trader with over 19 years of experience. To be exact, it's actually 21 years plus. So I've been a professional trading coach and technical analyst since 2007, and I'm also an expert in Ichimoku Kinko Hyo technique. When we talk about professional trading coach and technical analyst, it means I actually do work as a coach and a technical analyst. All right, I'm currently a director at the Zenefix, an independent market consulting company, and I've been a guest speaker at the Trading Investing Expo in Australia, Investfair in Singapore, and the ATA, as well as the APTA conferences, which is, if you don't know, it's the Australian Technical Analysts Association, as well as the Australian Professional Technical Analysts. All right, okay. So we're going to discuss what is inflation, and then we also take a look at what CPI is, which is the headline inflation, and we also discuss what the core inflation is, as well as a real-time example of the CPI trading. Now, with past experiences, it varies. It could be fast, it could be slow. It really depends on the situation and how the market reacts to it, as well as the expectation of the numbers as well. All right, so this is the code that you can use. It's non-farm 2023. So if you're depositing into your Octa trading accounts, you can use this code to double your deposit bonus. So if you're depositing 100, Octa will come up with the 100 as a deposit bonus. So there are going to be terms and conditions, so make sure you check with Octa as well as the customer service team, or you can even ask it here, and the team here will respond to what are those terms and conditions. All right. So the code again is non-farm 2023. It should be valid until the end of 2023. Okay, so let's talk about what inflation is. So inflation is the rate at which prices for goods and services rise. And the most commonly used inflation indices are the consumer price index, the core inflation, as well as the producer's price index, or the PPI, which is usually released after the CPI, but this month we actually got the PPI yesterday, and we're going to get our CPI tonight. Okay, so what is the CPI as well as what's the PPI? I'll explain the difference between the two. But the consumer price index, this is something that you want to watch out for. If we say CPI, you are going to translate that in your head as inflation. All right, simple as that. But the name is consumer price index, or the CPI. Nowadays, different calendars will show different things. They might say it's just inflation. They might say that it's CPI. But the CPI that we're talking about here in terms of measuring inflation, it's the year-on-year CPI, or the YOY CPI. So this is a critical indicator of pricing pressures in an economy. It provides a gauge of inflation, and forex traders monitor the CPI because it can lead to changes in monetary policy conducted by the central bank, okay, which can either strengthen or weaken the currency against the rivals in the market. And for tonight, we are going to take a look at the US CPI, and that means how the inflation comes up is going to affect what the FOMC is going to do next. Last night or this morning, depending on where you're from, we had a release of the FOMC meeting minutes. That's basically the minutes from the last meeting, okay, which already happened in September. Okay, so the next meeting is actually going to be in November, and depending on how the inflation reacts to it, the FOMC might have to pause interest rate hikes, or maybe they might continue hiking interest rates. So it does have a huge impact in terms of how it influences the central bank in making those monetary policy decisions, a lot more than the NFP, for example. The NFP kind of measures how strong the economy is in terms of whether or not the country is productive. Is there high unemployment and stuff like that? But it doesn't actually directly impact the decisions that the central bank makes. Okay, central banks does review the employment sector, whether or not it's still healthy, whether it's still tight in terms of the labor market. But the inflation number, which is the CPI, comes first. Okay, so let's take a look at the CPI and the PPI. So CPI stands for Consumer Price Index, and the PPI stands for Producers Price Index. Now let's talk about the CPI first. This measures the cost of living. Okay, if a country has a very high inflation, the cost of living there is actually high, and it depends, right? In terms of cost of living, it typically translates to standard of living as well, but doesn't mean that a country that doesn't have a high standard of living could not go into inflation. For example, during the Asian financial crisis, I believe Thailand and Indonesia went into hyperinflation. Malaysia nearly, but not as much. I don't think it actually went into hyperinflation. Turkey recently went to hyperinflation, right? So it measures the cost of living. Like, I mean, it literally just measures how much your currency can buy, and inflation, it's kind of a permanent thing. It gets added up every year. So year on year inflation, it always goes up, right? Your currency, maybe a dollar 10 years ago, could buy a lot more things than what it is now. Obviously, if you compare it to the 80s, a dollar in the 80s could probably equate to inflation included. I think it would equate to about 40 times more back then, right? So a dollar kind of equates to about $40 nowadays, right? So it measures the cost of living, and it's a constant thing. It will also includes broad range of goods and services purchased by consumer. It will include international personal consumption items. The scope excludes changes in interest rates or costs. That's your CPI. Now, when we talk about CPI, that's how much it costs for us as a consumer to purchase a good. So think about it. It's basically your purchasing power when we talk about inflation. As inflation goes up, your purchasing power goes down. Okay? So that's how it goes. The inflation goes down, purchasing power goes up. But I'll be honest with you, in reality, we never ever see purchasing power goes up, because the cost of things just keeps going up year by year. So I'll give you a very good example, right? Maybe when iPhones, up to about iPhone 5 or 6, I believe, you can still get iPhones for, not maybe $200-$300 less than what it is nowadays. Okay, depending on where you're from, obviously countries to countries, but I'll use this as a reference because I can't use the Big Mac reference. The Big Mac index is a different thing, but I'll just illustrate how much it costs. You can basically get a flagship mobile phones for less, maybe 5-6 years ago. Nowadays, you're probably going to have to spend about 20-30% more to get the same range of specs. Okay, so that's how it works. Now, the PPI is a Producer's Price Index. It basically measures the cost for them to produce an item. So it measures real growth in output, all right, and economic output. It includes items produced for personal consumption. It does not include imports, okay? So it's purely just an output perspective. Encompasses services with prices, including an interest rate component. So interest rate is actually tagged into the PPI. So the PPI and the CPI doesn't scale at the same level. So don't consider that if CPI goes up, the PPI doesn't go up, inflation doesn't go up. Inflation could still go up because if PPI factors in interest rate components, it might not go crazy like the CPI, okay? So that's just a little bit of a background about the CPI and the PPI. Okay, so I'll go through. If you have any questions, feel free to type it in. I can read through it. If we are on the same slides, we can go through it as well. But yeah, we'll go through that. Okay, so what is the core inflation? Core inflation is basically based on the CPI, right? It's basically core CPI. It's the same thing. So the core inflation refers to changes in price of goods and services, excluding those from fresh foods and energy sectors. Now, this is very specific. Foods are included. But when we talk about food that's being excluded from the core inflation, a lot of country excludes fresh produce, right? Basically fresh foods. Canned foods are manufactured, and they are canned, right? So they're manufactured. It can still be measured by the PPI, but core inflation usually takes out fresh produce or fresh foods out of the equation, right? Fresh meat, fresh vegetables, fresh fruits, typically they're excluded from the core CPI. And the reason why they're excluded from the core CPI, because food, like energy, could become volatile depending on the situation, okay? So it could be seasonal. For example, there could be a drought going on or a prolonged winter. For example, some produce are not, they get a little bit more expensive, and it is a commodity market as well, right? You do know that there's a rice market, there's sugar market, there's pork market, and stuff like that, right? So there are futures for that, and this market tends to be more volatile as well. So the whole point of having a core inflation number or the core CPI is to exclude all these volatile items. And obviously, when we talk about volatility, energy sectors are going to be excluded. So oil, petrol, gas, whatever you want to call it, those are going to be excluded from the core CPI. So if, let's say, the FOMC is looking at inflation, a lot of the central banks are going to be focusing on the core inflation because it kind of reflects the underlying inflation after all the volatility gets stripped off. Okay, so again, these items are going to be excluded from the measure of inflation because their prices tend to be more volatile, and typically core inflation is determined using the CPI itself. So it's going to be CPI, then the Bureau of Labor Statistics is going to take out all the energy prices, all the fresh produce. There are going to be items that they ticked out, they move it away. Okay, so that's going to be your core inflation. So when we talk about inflation tonight, we are going to be looking at 4 sets of data, and I'm going to give you a little bit of a review. We'll take a look at the year-on-year CPI. This is your headline inflation. So if someone says headline inflation, if you read up a news or a news broadcast says headline inflation goes up by blah, 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 that's your year-on-year CPI. Okay? The core CPI year-on-year is what we're going to be looking at next. And then there's going to be CPI changes per month. There's going to be CPI month on month, and the core CPI month on month. This measures the changes in terms of inflation growth monthly. Okay, so they could all reflect the same thing. They could measure the same. They could show you that inflation might be going up in the country. All of them are, maybe 4 of them comes up as a gain, for example, right? But oftentimes, when we look at the headline inflation number, the monthly number might not change drastically, okay, because it measures the rate of change per month. So now let's say last month's growth was 0.2%, and then we got 0.2% tonight, for example. It doesn't mean that inflation doesn't grow. It's just that it's growing at the same pace as last month. Okay, so it kind of its reading is kind of a little bit different. Okay. All right. So maybe I'll just show you the charts and historically what happens. We have 10 minutes, and then we're going to take a look at the market. And obviously, we are going to be using the straddle strategy. So if you have attended the NFP sessions, or you have attended Tuesday's session on news trading webinar, then you should know that we are going to be using a pending order. That's going to be the stop orders. Okay, maybe we'll take a look. Maybe we can do a limit order as well. All right, but let's take a look at the economic calendar as well as the charting history as well when CPI gets released. Okay, so let's talk about last night. This is the PPI numbers. And let me just give you a little bit of a reading on the PPI numbers. The month-on-month PPI went down a little bit, at 0.7% to 0.5%. But even though it went down in terms of growth rate, it's still a gain of 0.5%. Does that make sense, right? So last month it gained by 0.7%. This month's data we gained by 0.5%. When we talk about this month's data, is actually last month's, but it gets a little bit confusing, so we'll just call it this month's data. But the market consensus was 0.3%. Okay, so market was expecting the growth to slow down from 0.7% last month to 0.3%, but we get 0.5%. The core CPI sped up last month. We got 0.2% to 0.3%. Year-on-year core CPI actually went up. Market was expecting a drop to 2.3%. We got 2.5%, moving up to 2.7%. So this is actually a little bit of a clue to what it is going to be tonight. Okay, because the PPI number is expected to drop down. The headline PPI actually goes up from 2% to 2.2%. Consensus was for a drop to 1.6%. I would take this as a hint that the inflation number could actually be above consensus tonight, because that's what we get from the PPI. Now, obviously, what happens with the PPI doesn't have to reflect the CPI. But if we take a look at the cost of producing the items, all right, to be sold, so this is the producer's price index, it does point up to a little bit of an increase in terms of costs. Typically, this would translate to a higher price tag for a lot of the products. Okay, so usually we have the release of the CPI first, and then a day or two we'll get the PPI. But this time around we got the PPI first, and it kind of gives us a little bit of a clue to in terms of the inflation. Right? Is it going to slow down? Is it going to go down, or is it potentially going to go up? The PPI does go up, and in terms of going up, when we measure it through the consensus that the market is expecting, it does miss consensus by a lot, right? It went a lot higher than what the consensus is. Okay. Now, let's take a look at the data that's going to be released tonight. There's going to be 4 sets of data. This is marked by that red flag there. We're going to take a look at the inflation rate first, which is at the very bottom. Market is expecting inflation to slow down from 3.7% to 3.6%. Now, you're probably going to look at the top. There is consensus, there's forecast. I would take this as the range of what it could be tonight. But the market is expecting a slight drop from 3.7% to 3.6%. Now, if PPI was any indication last night, we could potentially see a little bit of an increase in the CPI as well. All right, either we saw a little bit of an increase, or maybe we didn't even go down. So it could stay flat at 3.7%. It could be higher than what the market is expecting. Now, the core inflation is expected to slow down a little bit. This is what the FOMC is going to be focusing on when they say 2% inflation target. They typically refer to the core inflation. Now, the core inflation is still at 4.3%. Market is expecting the core inflation to drop to 4.1%. Then we have the monthly numbers. Market is expecting 0.6% for the CPI to drop to 0.3% in terms of growth, slowing down. The core inflation remains flat in terms of growth at 0.3%, stable. Okay, so those are going to be the four numbers that you are going to consider. Okay, I've been looking at the chat here, just at the corner of my eyes. A lot of people are just shouting gold, 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 right? We'll go through it. Just be patient. Okay, we're gonna go through what the CPI first. I explain what the number says. We don't just you don't just turn up here and say I want gold and you get an answer straight away. So be patient. Don't spam. I read it. I'll answer it. Okay, cool. So let's get back to topic. Let's talk about the inflation numbers and what to expect tonight. And my concern from the PPI that got released yesterday, we could potentially see inflation remaining high for the US. So it might not drop to 3.6%, but any drop below what the market consensus is, for example, if the CPI drops to, let's say, 3.3%, 3.5%, that's going to be below the consensus. That's going to potentially drive the US dollar slightly lower immediately after the news release. But is it for long? Probably not. Okay, I'll explain a little bit later. Okay. So this is a little bit of a chart in terms of the inflation rate. You can take a look at the numbers from last year. So it has been steadily dropping down, but for the past 2 months, the last two CPI trade that we were looking at, we actually saw the CPI went up from 3% to 3.2%, last month from 3.2 to 3.7%. So we actually see the inflation start to pick up again in the US. And that's the reason why the FOMC cannot just say they're going to be pausing interest rate, because there's still a potential risk that inflation could pick up again. Okay. Now, the core inflation, this one here has been a steady drop. We do see a little bit of a pickup earlier this year, but following that, core inflation has dropped. Now, if you take a look at the drop in core inflation, let's go back to the headline inflation first. It drops down really quickly, right? From 8.2% all the way down to 3% in less than a year, in 10 months, and then it starts picking back up again. The core inflation drops down a little bit slower because it's going to be a lot harder to drop the core inflation down. Okay, and that's the reason why the FOMC continues to hike rate, and they're being hawkish, they're being aggressive in terms of their monetary policy, because they want to bring the core inflation down as fast as they can. But you can see from the records here, from 12 months, we only saw a 2.3% drop on the core inflation. So from here to the target 2% rate, it could still be a year to go. The fastest would be 6-7 months. Okay, cool. So those are going to be your inflation number. And you can see for the past 2 months, if I go back to the headline inflation again, the headline inflation picked up for the last 2 months, right? We saw a little bit of an increase in headline inflation, but the core inflation continues to go down. So with that in mind, the market could come out with a core inflation that goes down, but the headline inflation that remains the same or go up, right? So the number could be a mixed number, and obviously we don't like this. As a trader, we don't like a mixed number, because a mixed number could potentially create a whipsaw in the market. Okay, so we want to avoid that. Okay, so just very quickly, and I just want to say, if we take a look at the reaction from the market, typically it goes really quickly. This is a 15-minute chart. It could go really quickly in one direction, and then it could stall, and it could reverse the next day. So it's not a permanent thing. It really depends on what the number is. We'll take a look at the numbers post-release, and we'll analyze it. So the same thing as well. All right, let me just jump on through the chart, because I need to give you the levels right now. We only have about 5 minutes to go. So for this one here, I would assume that you understand what we're going to be looking at. We are going to be looking at buy orders, stop orders, right? I'm going to create 2 orders for every asset. This is on the Euro USD. I want to create a sell stop at below the range here and a buy stop just above the range. We are looking at a buy stop maybe about 1.0630. Sell stop, I'll be looking at about 1.0610. All right. So let's move on very quickly to the pound USD. For the pound USD, there are a couple of range, but I like this one here, a sell stop maybe just slightly about 1.2290. And for the buy stop, I'll place it a little bit higher because I don't want to get whipsawed into the market. So I'll have it at about 1.2330. So you guys want to focus on the bottom orders here. That's where the levels are. Okay, so I need to be quick because I'm a little bit late in explaining. We only got about 5 minutes. So I'll read the numbers again. Euro USD, you got a sell stop at 1.0610. A buy stop at 1.0630. You got pound USD, a buy stop at 1.2330, a sell stop at 1.2290. All right. I'll focus on the dollar Japanese yen first, and then we'll move on. All right, dollar Japanese yen, really want to have a buy stop above 149.35, a sell stop below 149, potentially even lower. I would probably have it at 148.90. Okay. Now this is for gold. There's going to be a little bit of a problem with gold because gold has been rising. So this is going to be tricky because we don't have a range bound market for gold. And this one here, unfortunately, we can't do a straddle on gold. But you can have this a little bit higher, maybe a buy stop at 80.98, just slightly out of reach of the 80.95. And in terms of a drop to the downside, you probably want to be looking at anything lower than 1870. Okay, you can still have it, but it's not going to be an optimum range. For the Aussie USD, you can have a sell stop at below 64 cents and a buy stop about 64.20. Okay, I'm going to give it a little bit more range for the Aussie USD. Okay, do we have time? Yeah, we got 3 minutes. Not to worry. Dollar Swiss and dollar Canadian. This one here is going to be a little bit tricky because if I go into the 50-minute time frame, do we have a buy stop? Potentially, yes, but kind of need to distance ourselves a little bit. Right about there. Okay. I think I got 2 order for the dollar Swiss. Yeah. So I'm gonna clear one. So whichever order gets hit, we want to close the other one. Okay. For a sell stop on the dollar Swiss, you want to have it just below the 90 cents mark, maybe about 89.90 on the dollar Swiss. The dollar Canadian, you want to have it a little bit further. For the dollar Canadian, you want to have a buy stop a little bit higher. That's about 1.3625 and a sell stop below 1.3575. I know the range is pretty huge on the dollar Canadian, so this might not be a tradable currency for tonight for the dollar Canadian, but that's the current range that we have. Okay, so let's work on it. Gold level, look, I'll be honest with you, gold is not pretty because you can see how gold is going up. Everything else is still in a range, right? We can still see a range, but on gold, this one here has been climbing up higher. So I cannot place an immediate order on gold at this point in time. I would have it above 1895 because 1895 is going to be the key level to watch out for, but we need to see whether it actually breaks 1900. For the downside, I want it to go lower than 1875. This one here is going to be a bit wider. I don't think it's that optimum to trade. Unfortunate, but I'll just be honest because I'm not going to give you just a random batch of trade for you to just place an order. No, I don't work that way. But yeah, for gold, a little bit more cautious for gold. I don't have an immediate range for gold. If you want to have a little bit of a smaller sell stop, it's going to be at 1878. So it's just so close to 1875. You really want to have it lower than 1875 at this point in time for the sell. Okay, for the buy, 1895 is pretty much it. All right, numbers going to get released anytime soon. So let's keep an eye out. What trades do we have? I'm not going to be looking at the charts anymore at this point in time. I'm just going to be focusing on the order types and the calendar as well. All right, there we go. We got sell Euro USD, buy on. Sorry, I got whipsawed on Euro USD. Right, this is probably the worst case, but it is what it is. Everything else, I need to be quick on this one here. Pound USD, I'll close the other pound USD. Oh, yeah, I'll close the pound. Come on, pound USD, close the pound USD. Aussie USD, close. The number is I'm just clearing out my position here. Just give me a little bit while I sort things out because I don't want to get double audits on everything. Dollar Canadian, dollar Swiss is triggered. Yeah. Okay. So I've got a problem with the Euro USD. Euro USD took out both sides. Core inflation is expected at 4.1%. It dropped down from 4.3. Headline inflation, as I say, it might stay at 3.7%, and we just got that. It stayed at 3.7% for the inflation number. So again, we're going to be looking at a little bit of a mixed number here because the core inflation drops down, but the inflation rate remains at 3.7%. So maybe I'll just show it to here. Okay, so we got 3.7%, remaining the same at 3.7%. Monthly, we got slight drop at 0.4% and everything else. All right, let's focus on the trade first. I'm locked in on the Euro USD, so I need to work out what that is going to be. I'm currently locked in on the Euro USD, but we'll look at all the other numbers first. All right, gold. Do not touch gold at this point in time. We'll assess this after everything settled down, and then we'll find a little bit of a direction for gold. But this one here, we are not breaking any ranges at this point in time. Okay. Everything else is good. We're profitable. I'm just locked in on the Euro USD, so I'm kind of hedged on the Euro USD. So I'll be really quick on this one. I want to see what happens here. But the inflation remains high at 3.7%. The PPI yesterday gave us a clue on this one here. So the monthly rate, it was lower from 0.6 to 0.4%, but it was higher than consensus at 0.3%. Core inflation as expected at 0.3%. All right, so this is running, even though I have a negative on the Euro USD, it's currently locked, but I'll need to figure out what to do with this one here, how to get out of it. Everything else is triggered except dollar Canadian and gold. This two, we gave it a little bit more room to go anyway. All right, so yeah, pound USD, we're looking at a little bit of a resist support here building up. We need to be a little bit more cautious. If the first 50 minutes doesn't break this low, if it doesn't close this low, then we might consider getting out of that trade on the pound USD because we have a short trade on the pound USD as well as the Euro USD. If it doesn't break any lower than around 1.0575, then we need to get out from the trade. Okay, so just keep that in mind. We're still not quite safe as of yet. The dollar Japanese yen, obviously we're dealing with 149. Dollar Japanese yen, we want to target 149.85, 150. No big deal. I'm gonna leave that. Gold is what you're gonna be focusing on. This is currently dropping right now, but gold has a little bit of a different dynamic with what's currently going on with the whole geopolitical thing. So things could change very quickly. Okay, so I need to decide what I want to do with the position right now. Gold stable, oil stable. So yeah, Euro USD, this is only the first 3 minutes. I'll give it about 5 more minutes, see how it is. But if it doesn't drop down, we need to close out the position. Because no matter what it is, we're still looking at a number that's a little bit mixed from the inflation number. Okay, so core inflation remains at 3.7%. This is above consensus of 3.6. Core inflation drop per consensus. Monthly rate stable on the core inflation. Slight drop on the monthly CPI, but it's still higher than what the market consensus is. Okay. All right. Any other currencies you want me to request, and maybe we'll take a look at it. Yeah, I don't think it's going to break either. It's going to be a tough one for gold. I'll be honest with you in terms of gold, because we've got other factors at play here. A little bit mixed, more slowing down. Not really, because if you look at the headline inflation, it didn't go down. And that's probably reflecting what the PPI kind of hinted at us, because the cost for production anyway, it goes up. So yeah, so we'll see. Jobless claims, is it going to be today as well? I think it is going to be today, right? Let me just filter out labor market to jobless claims. Yeah, it just got released. I wasn't looking at it, but jobless claims was down, which is good. 210 to 209. it's flat at 209,000, exactly the same as last week. So, but it is below the consensus, so technically it's good for US. Continuous claims was up slightly, 1702,000, so 1,702,000. But the weekly jobless claims was down. But yeah, all the positions are pretty much in place. I'm not changing it. I'm only regrading the Euro USD because the Euro USD snapped up the buy and sell. So I'll need to be quick, all right? Maybe we need to get out of the trades soon, but we'll see. I want to see if the there's going to be a candle close below the range that we have established here. I can't get the MT5 to actually fill in this rectangle. Oh, you can. Sorry. There we go. So I want price to break through that level, at least on the 15-minute time frame, because if it doesn't break through that on the Euro USD, we're going to have a problem, as well as the Pound USD. We need to clear off this box that I have here, because if it doesn't clear off that box, we might actually bounce off a little bit intraday. That's a cue. You need to cut off your positions. Right, if you have a position right now, you probably want to move your stop loss to break even if possible. Right, it's going to be tight, but it's much better than losing out on any positions that we have. Simple as that. Okay, maybe on the dollar yen, you can't actually move it down. You probably need to have it about 149.02. But let's set our stop loss right now. Pound USD, if you can move it to break even, move it to break even. Dollar yen right now, you probably want to have it about 149. For gold, we're still waiting. We don't have a trade on gold. For Aussie USD, you move your stop loss to. If you want to hold the position, you can have it at about 64.10, right? That's probably logical. Or if you're afraid, then you move it to break even. That's completely fine as well. Dollar Swiss, same thing. I'll probably want to move this to break even on, no, probably a little bit lower. Yeah, I'm willing to risk about 20 pips on the dollar Swiss. Dollar Canadian, no movement as of yet. New Zealand USD should be a short for New Zealand USD. We didn't have time to do an order on the New Zealand USD, but yeah. US 30, this one here is stable. This is like gold at this point in time. Oil, very stable. No big deal. All right. So any requests on others that we might want to look at? Positioning on pound right now is still a short. But let's move on to the Pound USD here on the here. Let's go with the Pound USD on the trading view first. So Pound USD on the hourly time frame is currently within the Ichimoku cloud. I think we're going to be looking at a little bit of a retest of 1.2250. So keep an eye out on 1.2250 intraday wise. See if it bounces off 1.2250. So we might actually use that as a potential target for us as well, about 1.2250. Pound probably not, because we have a little bit of a slower GDP growth from the UK today. It kind of triggers a drop. So I'm not sure what the initial reaction is, and we'll see it. All right, silver. Okay, we'll take a look at silver. Silver is like gold at this point in time. Really hard to kind of figure out what it is. I'm not gonna be placing a buy stop order. Actually, for gold, I actually want to cancel that out. Unless we actually drop below 1875 for gold, then I'll probably leave it. But ideally, you really want to have it a little bit lower, maybe about 1866. Silver, hourly, likewise. I think for a sell on silver, look. Silver and gold is going to be a little bit tough, because with whatever's going on, there's still going to be a run to precious metals. So yeah, if it drops, it's probably not going to drop crazy. It's not going to drop in a crazy amount, because technically we're still looking at a little bit of an uptrend on silver and on gold. So I don't really like selling gold. I'll be honest with you, I don't really like selling gold at this point in time. Can it go down? Yeah, it might be able to go down, but if it goes down, there's a lot of support to the downside. Maybe gold, in terms of considering how far it can go down, maybe it could actually fill in the gap, but it's really far away. You got swing short on pound. Can I move your stop loss to 1.236? Yeah, you should. I know your position. You've been shorting from 1.3. Should you move to 1.2360? Yeah, I think you should move it to 1.2325 actually. So the conclusion about this: inflation is stable and not cooling down. Core inflation is cooling down. Headline inflation is not. Aussie USD hits stop loss a little bit at break even. So I'm actually gonna. I'll leave Euro USD. I need to kind of close out the Euro USD. Pound USD has dropped down. You should get off your Pound USD at this point in time. The Euro USD is currently locked, so this is not a profitable trade for me. But in total, I'm still up for the whole thing. So in 4 minutes time, we'll figure it out. Because if it breaks the 15-minute support, then we could potentially see a lot more push to the downside. Chucks, DAX and US30. There, where I have positioned DAX 150, 15,550 and 33,950. For the US30, you have what? A long position or a short position? I'm a little bit concerned with this box here. If we don't close any lower than this, it's going to be problematic. But I'm just going to leave it at it as it is. Aussie USD got closed out at pretty much break even. But if you had your stop loss a little bit higher, it should be okay. I had moved it a little bit lower. All right, let's take a look at DAX and USD while we'll leave this running because we already have stop loss placements for everything else. So I'm not really too concerned about it. So let's take a look at DAX. Assuming you have a short or a buy for DAX and the US30, Chucks. 15,550. I need more information. Short or long on the DAX? I'm assuming a short. If you have a short on for DAX at 15,550, hopefully you're not buying. But yeah, let me know if you have 15,550 as a short. Then obviously the swing high is going to be your stop loss. In terms of your intraday target, you're going to be looking at 15,400. Not sure if there's still enough time, but you should. The US30. 33,950. 33,950. Okay, you entered short, so it's alright. Your stop loss should be at whatever high it is. Okay, simple as that. It's very dangerous to go short DAX and US30 at this point in time because you can see how strong it is technically and still an uptrend. If you want to have it a little bit safer, move your stop loss a little bit higher than 34,000. But in terms of potential target level for US30, you're probably going to be looking at the cloud area, maybe about 33,750. That's still going to give you about 1-to-1 risk reward ratio. All right, let's go back. I'm still waiting on gold. I don't like shorting gold. I'll be honest with you. I do not like shorting gold. I don't want to sell gold at the current level. I'm actually going to cancel my gold orders level. I do not like going short on gold. Okay, and reason being, it's technically in the short term, it's still an uptrend. We have a lot of support. Intraday wise, we are actually looking at about 1875 as a support. We actually did a webinar on Monday. We went long on gold, but right now you want to focus at 1875. If there is no hourly close below 1875, you do not want to go short gold. Okay, do not go short gold. Do not sell gold if it doesn't close below 1875. There's a lot of things to go for gold at this point in time. Okay, if you want to go short gold, you want to wait for an hourly close below 1875, and then you can use the last hourly swing as your stop loss. In terms of target level, you could potentially look for 1865-ish. You're probably going to get about 1-to-1 risk reward ratio. But I don't like shorting gold. One being that this is currently still in an uptrend if we look at the hourly time frame. Okay. All right. So everything is stabilizing itself right now. Euro USD has not closed below the box, so I'm actually gonna close out the Euro USD sell. I'm currently locked in, but this doesn't close below that box. The pound USD, it's all right. For the pound USD, I'm fine. I'll leave my stop loss at break even. Hopefully it doesn't snatch it. If you don't want to get stopped out and you want to give it a little bit more room, have your stop loss at 1.2315. Okay, at the swing before it drops down. But I'll be honest with you, you probably want to have it closer to your entry at this point in time. Okay, if we didn't get it, we didn't get it. Simple as that. There's a lot of risk involved at this point in time. So it's kind of slowing down a little bit. I'm concerned about the Euro USD because it didn't actually close down below 1.0575. So let me bring it back down here so I can show you what it is that I'm actually looking out for. So I'll hide the pivots and I'll leave the Ichimoku for now. Okay, I'll hide the Ichimoku, but I want to stress out one level. It is actually 1.0575. The reason why I want to look at 1.0575, that's basically the start of the gap. I think that's where the market gaps this Monday. I'm going to close that out. This one here, I don't need that. We're done with that. But yeah, 1.0575. If you follow me and take a look at what the gap creates on Monday, that's the level we need to break below. We basically need to break below that level. Otherwise, we're not going to be looking at the drop on the Euro USD. Okay? So obviously on mine, I can't do much because I'm currently locked in. I got whipsawed on Euro. So this is currently locked in. I'm just waiting for the moment to kind of release what it is. But for now, let's keep it at it. We still have 10 more minutes to go. If in 10 minutes time, we are still here at the current level, it's not going anywhere, it's best to clear off your position, no matter what it is, whether it's going to be profitable or is it going to be a loss or whatever. Okay, so if it's not breaking below 1.0575 on Euro USD, you need to close out the position because this would signify a bounce off that gap here. Okay, on the Euro USD. For the pound USD, we are okay-ish at this point in time. But if you really want to see this one continue to slide lower, you really want to have an hourly close below 1.2250. Because if we don't have that close below 1.2250, this is going to have a similar issue with what we saw on the Euro USD. That was the previous resistance that's currently being tested as a support for the pound USD. So while the inflation data comes out mixed, the headline inflation remains flat at 3.7%. The core CPI does go down to 4.1%. Regardless, I think what we're going to be looking at tonight is price action. And if price doesn't close below these levels on the Euro USD and the pound USD, you need to close out short positions on the Euro USD and the pound USD, okay? Because there's a higher probability that price might just bounce off these levels. We have 10 more minutes. We'll see how it is. If it doesn't go down in the next 10 minutes, whatever you get, you're better off cutting it. Because right now, even if you go negative at this point in time, if you go through with the current strategies, you should still be positive. You're only looking at this negative here because I got locked in on the Euro USD there. Yeah, we got option expiry at 1.0575. I think the expiry is going to be in 2 hours time. It's 10 o'clock New York time. All right. So gold, we're still waiting on gold. As I said, I do not like going short gold. Okay. I do not like going short gold at all. I can give you a lot of reasons for that. And I don't actually comment on gold a lot, but this time around, I'm not playing around with gold because we got 1875. If there's no hourly close below 1875 and gold continues to create a new high, it could actually snap and just breaks higher. The 15-minute range currently established would identify this as a potential long position if it does go higher than 1886, 1887 actually, 1887. I'll adjust it. But this is a much better scenario for gold, even though if we take a look at the resistances, we're going to meet up with 1895 and 1900. So I don't think this is going to be a breakout run on gold because we already saw gold picked up earlier before the CPI. So I think market was pricing a little bit about the CPI number. But yeah, if it does hold at 1875, you want to have your stop loss below 1875. You can go nuts in terms of your targeting level. You want to go 1895 all the way up to 1910, it's up to you. But I much prefer to go long gold at this point in time. Okay, we're currently above the pivot level. Projections, we got 1900 at resistance 3 for the daily pivot. That gives us a much better view for gold. And it's currently bouncing off the Ishimoku cloud as well. I cannot give you a reason to go short gold at this point in time. Wilvin said it's very rare that I don't like shorting gold because my point of view on gold has been short gold throughout the whole year. So if I say do not go short gold, it does mean something because technically it's very hard for me to go short gold right now. You can go onto the hourly time frame, you can see how strong that trend is. It's really in such a strong uptrend, and it's just not closing below 1875. Doesn't give you a reason to go short. Technically we're still above the pivot, we're trading above the resistance 1, potentially even getting up into resistance 3 on the daily pivot. It falls at 1900, so I like going long gold actually if it doesn't close below 1875. Okay, so that's my view on gold. Let's check back on the euro and the pound. Still not going down, right? So this is a really huge concern at this point in time. We're still in positive technically, even with that stopgap on the euro USD. But yeah, but geopolitical too. Yeah, it's going to be fierce everywhere. So there's a lot of things supporting gold right now. It's not really about the monetary policy anymore. And technically, we have a little bit of a dovish comments from the FOMC meeting minutes last night. It was a little bit dovish anyway, because the FOMC was starting to get confused. They were being a little bit more defensive in terms of talking about future rate hikes because they're starting to get concerned about the US economic growth. How is it going to be impacted if they continue to hike interest rate? So that gives gold a boost in terms of fundamental. Obviously, the geopolitical tension that's currently going on also gave a boost to gold. So I'm not in a position to like shorting gold. I'll be honest with you. Silver, same thing. You do not want to go short on silver yet. Technically, it's mimicking what gold is. Basically, look at silver. It's just a cheaper version of gold that doesn't move a lot, right? So silver, you still do not want to go short silver. Okay, technically on the hourly time frame, we're still bouncing off the support trend line anyway. The gap for silver was actually filled, so I'm not really too concerned because the gap was filled. So this was done. There's no reason for me to go short silver and gold. I don't have a reason to go short silver and gold. And I don't have a reason to short oil as well. I've been sending out reports on oil. Watch the outlook this week. There are huge, potential that oil shortage could happen. And EIA just published a report today as well that they're actually expecting shortage for 2023. They're expecting a higher, a new high for 2023 for oil prices. So yeah. Okay, Moment of truth. 5 more minutes. I'm gonna be on standby here for 5 more minutes. But any questions that you guys have, and we'll come back to this before the hourly close. I might wait for the next 5 minutes here because I want to see whether the hourly closes below or not. Right. So Euro USD, I want it to close below 1.0575. I want it to transition below the Ichimoku cloud. I want it to clear that gap that we have as a previous resistance that's currently being turned into support. I need to break that, otherwise we're not going to be looking at any momentum to go for the Euro USD. Pound USD, the same thing. I need to clear off 1.2250 for it to transition into a downtrend, and I want to wait for it on the hourly time frame. I need an hourly close. Oil. Let's talk about oil. I got a lot of projections for oil, right? So I actually posted out an outlook on this one here. There's a lot of reasons. I've actually published a report on this one here, but whatever is going on, I don't want to talk about it in too much details because it's sad and it's very disturbing of what's really going on over the weekend. But the conflict in the Gaza Strip at this point in time between Israel and Gaza, all right, if somehow Iran is proven to be involved into the whole thing, right now it's currently Hamas and Israel, but there were issues, there were rumors that Hezbollah starts moving as well, and if Hezbollah get involved, Iran gets involved, and then everyone else is going to get involved, right? Straits of Hormuz is where 20% of the oil supply in the whole world has to pass through, and Iran can block that. And block that route, it means they're going to cut off 20% of the supply immediately. So there's a lot of concern on the potential risk here. Hopefully it doesn't escalate, but if it does escalate, there's a lot to go on for, right? If Iran gets involved, I think there were rumors today that Qatar might actually cut off oil production. So I don't know what's going on here, but there's a lot of risks. If things goes bad, it could cut off oil supplies. I know last night we have a little bit of a drop in oil because the U.S. stocks was good in terms of their supply. They still have a lot of supply. But we're talking about the next 2-3 months, right? Winter is coming, shortage. If the conflict escalates, then it's going to create a lot of shortage. Okay. All right. I don't think in the next 2 minutes this is actually going to close below 1.0575. So we'll see. Hopefully it does. We'll see what happens here in the 15-minute time frame. I just want to see this clear off the current range. If it doesn't clear it off, then I'm just going to close out everything and just be down for the day. Unfortunate, but sometimes we need to do that. We could have taken some of the profits just now, but I was kind of waiting at this key levels here. We were looking at that. But the initial breakout, if you guys got out, then yeah, good. You probably got out fine. But if you have the positions, we are thinking of whether should we stay or should we go out from the current positions that we have. Ignore the buy Euro USD because this one here I got whipsawed. The proper position is actually the sell on the Euro USD. Okay, so I'm actually gonna get rid of that buy there just to show you what it is technically. We got 4 running position. Aussie USD was closed out at break even, but right now Aussie USD is also flat. It's not going anywhere, so we're fine. Euro USD, Pound USD, dollar, Swiss dollar, yen. Let's see how it is. But I might consider closing out of these trades. Okay, 1 more minute to go, and then we'll see. This is really pushing. I think a lot of traders want to see this go down below 1.0580 right now on the Euro USD. We'll see. All right. Okay, so the code again, we'll go back to the trades, but the code again, if you want to use it, it's non-farm 2023. You can use this to double your deposit bonus, right? Again, the code is non-farm 2023. And we already answered this on the Q&A session. So I really want to thank you for participating on our news trading sessions for the month of October. But before we go, it's the close of the hour and we are staying. Okay, so stop loss for Euro USD should be moved to break even right now. You don't really want to have anything higher than break even at this point in time. So we're gonna leave the trades, but move your stop loss to break even. I don't have any particular reasons, but just want to keep it limited. I don't want it to reverse on itself. So Euro USD at break even for your stop loss. Pound USD stop loss at break even. Dollar Japanese yen stop loss at break even. Dollar Swiss stop loss at break even. And we are going to leave the trade for tonight. If it hits, it hits. If you want to get out right now, feel free to get out. But the Euro USD and the Pound USD, in terms of target level, for the Euro USD, we could potentially go for, I think we're actually really close right now. If you want to go target 1.0550, you could, but really want to keep an eye out 1.0575 at this point in time. Okay, so I'm actually going to go out Euro USD. Pound USD, yeah, I'll just close out everything. Okay, all right, that's pretty much it for this session. Thanks for joining in, but other than that, just keep an eye out, because the market could actually reverse on itself. Just be mindful of what's really going on, because we technically did not break some of the key levels here on the Euro USD. We didn't close below 1.0575. For the Pound USD, we didn't close below 1.2250 as well. So it's kind of unfortunate, but if you want to get out from the position, feel free to get out, because there's a potential risk this could bounce. And for gold and silver, do not want to go short for gold and silver unless we have an hourly close below 1875. All right. Thank you, everyone. Have a great, fantastic week ahead. Enjoy your weekend. And I'll see you soon.